Welcome back to the deep dive. Today, we're plunging into a topic that, well, it touches every single one of us. The fascinating, often misunderstood connection between money and happiness.
Hmm.
It's not just about how much you earn, is it? It's really about how you manage it and, crucially, your mindset around it.
Absolutely.
We're going to extract key nuggets of knowledge from various sources today, hoping to help you gain a quick, thorough understanding. Okay, let's unpack this.
Yeah, let's do it. Our sources today offer a really practical, multifaceted look at how you can make your cash work for you, without all the usual stress.
Right.
And they uncover some surprising insights that go, well, quite a bit beyond your traditional financial advice.
Okay.
So our mission in this deep dive is really to inform you about core financial truths. Stuff like managing debt, smart investing, and maybe most importantly, how your whole approach to money profoundly impacts your well-being.
So let's kick things off right there then with that foundational link. Money and happiness. We all know money doesn't grow on trees, right? But what our sources make really clear is that financial stability isn't about having some kind of money tree.
No, at all.
It's actually about setting clear goals and, maybe the big one, paying off that dreaded debt.
Yeah, that debt piece is huge.
And the core message here is actually pretty profound. Happiness is finding peace, not the next big sale.
That's such a powerful way to put it. It's a real shift in perspective, isn't it? Moving from just consuming things to focusing on your internal well-being.
Definitely.
This idea of peace of mind. That's often the real return on investment from good financial habits.
Peace of mind is ROI. I like that.
Yeah. I mean, when you're not constantly stressed about bills or debt, it just frees up so much mental and emotional space. And that's a direct path to, well, greater happiness and just better life satisfaction overall.
Okay, so for us day to day, how do we actually start making these changes? Without feeling completely overwhelmed, where do we even begin?
That's the key question, isn't it? And the good news is it doesn't require some radical overhaul overnight.
Okay, but
Our sources really highlight that if you're feeling, let's say, broke, the first step isn't just about earning more necessarily. It's more about radically prioritizing and finding pockets of opportunity. Even small ones count.
building momentum.
Exactly. Building that momentum.
And they use a really vivid example for that, don't they? It's not about these huge sacrifices, but consistent, smart choices. Like maybe skip the avocado toast. Everyone loves that one,
Yeah.
unless you're selling it to someone else for profit.
Right. That really drives the point home. Small, consistent actions. That's the key to big results down the line.
It really is.
It absolutely does. It's all about building habits that serve your long-term goals rather than just seeking that instant gratification buzz.
Yeah.
And this principle, consistent actions, small choices, it actually extends directly to how you approach building significant wealth through investing too.
Okay, so it connects.
Totally. Many people start with those daily tweaks, but then they wonder, okay, how do I make my money really grow over time? And that's where understanding different investment paths comes in.
Right. Speaking of investments, let's talk about bonds. For some people, they sound, well, let's be honest, a bit unexciting.
Yeah, they don't have the glamour maybe.
But our sources describe bonds as the reliable friend who always shows up to the party.
That's a good one.
They emphasize that slow and steady wins the race, just don't expect fireworks. It's often presented as that low-risk, steady growth option.
Yes, and that's fair. Bonds are largely about capital preservation and providing consistent, although, often modest returns.
Right.
For an informed listener, the real insight is understanding how bonds can act as a kind of ballast against stock market volatility.
Okay. Like a stabilizer.
Exactly. Providing stability and predictable income streams. That's especially crucial maybe when you're approaching retirement or just seeking to reduce the overall risk in your portfolio, even if the individual returns seem lower.
So they're basically loans.
Essentially, yeah. Loans you make to a government or a corporation, and they pay you back with interest over a set period. Reliable, like that friend.
Okay. And then, on a completely different risk spectrum, we have what one source called the ultimate wealth building showdown, real estate versus stocks.
The showdown.
And the analogy here is fantastic. One's like babysitting, the other's like a roller coaster.
That paints a picture, doesn't it?
It really does. And the advice, choose your ride based on your nerves. But, when someone is just starting, how do they really assess their nerves? It's easy to say you're risk tolerant until the market actually dips, right?
Oh, that's such a crucial point. It's often through, well, trial and error, frankly.
Yeah.
But our sources suggest maybe starting small,
Mm-hmm.
perhaps with a diversified fund that includes a bit of both, and then pay really close attention to your own emotional reactions during market ups and downs.
So self-awareness is key.
Self-awareness is just as important as market knowledge here, absolutely. Real estate often requires more hands-on management, like the babysitting analogy suggests, but it offers tangible assets and potential rental income.
Right. You can touch it.
Exactly. Stocks, on the other hand, whew, they can be a wild ride, fluctuating quickly with market sentiment, just like that roller coaster. So, yeah, your comfort level with those different dynamics really informs which path might be better suited for you.
Your comfort level. Okay, but here's where it gets, I think, even deeper. Because it's not just about what you invest in,
No.
but the fundamental mindset you bring to money itself.
Yes, the mindset piece.
Let's dive into some transformative lessons from that classic book, Rich Dad, Poor Dad. The source describes it as basically a battle between two dads, one rich and one, well, not so much.
It's a really powerful framework.
Mm-hmm.
Robert Kiyosaki's big idea is all about that mindset difference. It's stark.
How?
Well, his rich dad thinks like an entrepreneur, right? Always focused on acquiring income-generating assets. While his poor dad, the highly educated one, interestingly, sees a paycheck as the ultimate goal, the answer to everything, essentially just trading time for money.
Trading time for money versus assets working for you.
Precisely. It's a profound distinction in how they approach work and building wealth.
And why it matters, according to the source, is that it's a real wake-up call. It makes you question your whole approach. Like, fundamentally, are you working for money or is money working for you?
That's the million-dollar question, isn't it?
But what does thinking like a business owner truly mean day to day, especially for someone who isn't, running a big company? Is it about seeing every expense differently or shifting focus from just an hourly wage?
That's exactly the core of it.
Yeah.
Yeah, it means viewing your time, your resources, all that as capital to be invested, not just spent.
Okay.
So instead of just asking, what's my hourly rate, you
Yeah.
start asking things like, how can I create something that generates value independently of my direct labor?
Ah, okay. Independent value creation.
Right. Kiyosaki defines an asset very simply. Anything that puts money into your pocket.
Mm-hmm.
Think rental properties, dividend stocks.
Yeah.
Versus a liability, which takes money out, like maybe that fancy car payment.
Gotcha.
That's the real shift, from trading time for money to building systems, even small ones, that make money work for you. So the action step from this whole philosophy is pretty transformative. Start thinking like a business owner, not an employee.
Easier said than done sometimes, maybe?
Oh, for sure. It takes practice. But the goal is to buy assets that make you money while you sleep. And the source adds, and no, your bed doesn't count as one of them.
Uh-huh. Okay, good clarification. That's definitely a hot take that shifts perspective. It's like reprogramming your financial GPS for a reroute, maybe away from just endless work and student debt.
Exactly. Rerouting.
But they wisely caution, don't expect it to get you to the Bahamas tomorrow.
Definitely not. It's a journey, right? Not a sprint.
Yeah. And this shift in mindset from employee to owner, that's also what empowers people to maybe explore other opportunities, even in newer, less traditional areas.
Absolutely. And that mindset applies perfectly to the idea of, say, scaling a side hustle, too.
Ah, yeah, the side hustle economy.
Right. Turning that side hustle into a full-time income. The source says it's like upgrading from a bicycle to a sports car. Both need careful driving.
Good analogy. Needs more skill, more attention, maybe.
Exactly. It emphasizes that while the potential is obviously greater, it requires real intentionality, planning, and consistent effort. It's not just about that initial entrepreneurial spark anymore.
Right, you gotta steer it carefully. And speaking of new frontiers and that consistent effort, we have an interesting anecdote from one of our sources about exploring crypto options.
Ah, crypto. Always interesting.
Yeah, but the crucial first line, this isn't a get-rich-quick scheme.
Super important disclaimer, especially with crypto options.
Can you clarify what those are, briefly?
Sure. So crypto options are derivatives. They give you the right, but not the obligation, to buy or sell a specific cryptocurrency, say Bitcoin or Ethereum, at a set price by a certain date.
Okay. Sounds complex.
They are. They're highly volatile and complex instruments. But what's powerful about the story isn't just that they did it, but how they approached it.
Right, the process.
Yes. This person didn't just jump in blindly hoping for the best. Instead, they deliberately sought out a community, found experienced traders,
Sure.
and then they committed seriously to learning the intricacies of this really complex market. Only then, cautiously, did they put that knowledge into practice. This wasn't about luck. It was intentional, structured learning.
Okay, so education first, action second. And for them, starting with, I think it was $3,000 back in September, and seeing it doubled was significant progress. But they emphasize they're still learning, and they're only focusing on the big players in crypto, Bitcoin, and Ethereum, probably because they're seen as relatively more stable in that very volatile market.
Right. Sticking to the majors while learning. It's a sensible approach in that space.
Yeah, and this story really reinforces that message. It's perfectly okay to start small.
Totally okay.
But if you're serious about building wealth, the one thing that's not okay is never starting.
That's the kicker, isn't it? You have to start somewhere. And it underscores that idea again. Education is the best investment, even, maybe especially, in newer, more volatile markets like crypto options.
Yeah, knowledge is power, financially too. And sometimes understanding money isn't just about traditional investments or even side hustles, but about recognizing where value is shifting in unexpected ways.
Mhm.
Speaking of which, our Wealth Whiz section, as we call it, has a truly wild example of how value and privacy are being redefined. Did you know you might be able to book a hotel room for just $1 a night?
$1. What's the catch? There's always a catch.
Oh, there's a catch. It's if you're cool with the internet, watching your every move, like live streamed.
Whoa, okay. That's different.
All right. As the source jokes, who needs Netflix when you are the content?
Uh-huh. Well, what's fascinating here, I think, is how it just fundamentally challenges our conventional ideas about value and privacy.
Totally.
It really highlights this emerging economic model where our personal data itself becomes a form of currency.
Yeah, data is the new oil or something.
Kind of the deeper insight, maybe, is how our willingness to trade aspects of our privacy for perceived value, like a $1 hotel room, is reshaping markets. And it forces us to consider the hidden costs, right? The hidden costs of free or cheap services in this digital age.
Yeah, nothing's truly free. It's highlighted as a genius marketing move for these hotels or B&Bs, though.
Yeah.
Get eyeballs, even if it's extreme.
Oh, from a marketing perspective, it's definitely attention-grabbing, no doubt.
And that really ties back to the bigger picture, doesn't it? Money, happiness, and what we're willing to trade for it, sometimes in very subtle or maybe not so subtle ways.
Indeed. It all connects back.
So as we wrap up this deep dive, let's try and take this with us. What's the core message? Financial freedom isn't just about earning more money.
No, it's much more than that.
It's fundamentally about changing how we think, how we save, and how we invest.
The whole approach.
Yeah, whether it's scaling that side hustle carefully or tackling debt step by step, playing the long game with, say, reliable bonds, or maybe bravely exploring new ventures like crypto options. The point is small, consistent actions really do add up to big results over time.
They absolutely do. And I'd add, don't let fear hold you back. Seriously, the time to take control of your financial future, it's now. The insights of these sources really show that knowledge, finding a community, and consistent action are your greatest allies. Understanding the nuances, of different investment vehicles, sure, but maybe more importantly, cultivating that mindset where your money starts working for you. Those are pivotal steps.
So go ahead, take that first step today, whatever it looks like for you, and just watch how everything starts to shift.
Take this step.
And maybe as you embark on this journey toward financial peace, consider this final thought. Beyond the dollars and cents, what specific non-monetary asset do you value most? What could that financial peace actually unlock for you personally? Maybe it's time, maybe it's freedom from anxiety, maybe it's joy. What could a calmer, more intentional financial life truly bring that you can't actually put a price tag on? Something to think about.